what a day to have you. No China, no problem? I mean, is that what the market is saying here?
Look, I think you have to take a little bit of a broader picture of what's been going on with the AI trade, right? And it singularly has to do with the perception around AI capex, right? Just a couple of months ago, when all of these stocks were on their lows, there was this perception that AI capex was in the later innings. And now I think we've squarely gotten to the point where now the market believes that AI capex is in the middle innings. And let's talk a little bit about why that's happened and why that shift in perception has happened. One is competition around frontier models is not slowing down. So we saw Meta, right? They took a little bit of a step back with Llama 4, but how are they reacting to it? They're reacting to it by investing a lot in AI scientists. They took a stake in Scale AI, and they're not going to slow down until they win this race. And so that's one. Secondly, the shift that's happened very, very quickly over the last 3 to 6 months is that compute is not only being used for training infrastructure, but it's increasingly being used for inference. OpenAI's revenues have gone from $3 billion to $10 billion very, very quickly, right? And then the last piece of it is just the Trump administration policies is opening up access to Nvidia GPUs to a wider, broader set of countries like Saudi Arabia with the deal. And so you're seeing everything that was, oh no, AI capex is coming to an end. All signs over the last 3 months have pointed to AI capex accelerating, not actually decelerating. I think that's what's happening.
The shares of Nvidia saw a spectacular turnaround from earlier this year, rising more than 4% on Wednesday to reach a new record high of $154.31. During Thursday's pre-market trade, the chipmaker's shares was up more than 1%. On January 6th, Nvidia stock previously closed at a record close of $149.43. During Wednesday's trading session, the stock's increase also caused shares to hit a new intraday high. Following its first quarter earnings in late May, which revealed revenue that above Wall Street's estimates and demonstrated the company's continued success despite a new export prohibition on sales of its chips to one of its key markets, China, the AI chipmaker's stock has experienced a notable increase. Since Nvidia's May 28th earnings release, shares have increased by more than 14%, well outpacing the S&P 500's 3.4% gain during that same period. Ananda Barua, an analyst at Loop Capital, increased his price objective for Nvidia stock to $250 on Wednesday, the highest of all Wall Street analysts that Yahoo Finance tracks. According to the new price goal, Nvidia's market capitalization may increase from its current $3.6 trillion level to $6 trillion. In a note to clients, Barua stated that although it may seem amazing that Nvidia's fundamentals can continue to rise from their current levels, we remind people that Nvidia still has price and margin control and is effectively a monopoly in vital technology. Loop Capital analysts also predicted that the market for AI chips would reach $2 trillion by 2028. Indeed, given that big tech companies make significantly less money than they spend on developing the technology, there are still concerns about whether the demand for AI infrastructure will keep growing. Following its record close in January, Nvidia's stock had suffered in the months that followed as the global markets were shook by President Trump's trade war and China's artificial intelligence competition. On April 4th, shares ended the trading session at slightly over $94, the lowest closing price in more than a year. In May, agreements to deliver hundreds of thousands of Nvidia's AI processors to Saudi Arabia and the United Arab Emirates boosted the company's shares before its first quarter earnings announcement. Early in June, the stock's recovery allowed it to momentarily surpass Microsoft as the most valuable corporation in the world. As investors pour more money into tech equities, there is an uptrend. Tech inflows reached their highest level since June 2024 last week, according to a note released by Bank of America analysts on Tuesday. On Tuesday, the Nasdaq 100 closed at a fresh record close, and the Nasdaq Composite hit its highest levels since February. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Nvidia also hitting a fresh intraday high. That's today's leader. But the recent tech rebound shows a lot of breadth beyond just that name. Deirdre Bosa has more in today's Tech Check. Deirdre, I also love this whole chips for the new oil thing because a lot of us might go, no, don't say that because oil's been terrible lately. We don't want to, to go quite that way. Anyway.
Right. But I mean, that's the oil now, so chips are taking its place. And just as oil once powered industrial growth, semiconductors, they're now fueling the AI boom. So right now, the market is placing its bets accordingly. And let me sum it up with this chart. This is Melius's AI chart of the week. They call it semis as the new oil. So here's the reasoning. Back in 1980, energy peaked at around 30% of the S&P. Today, semis and semi-caps, this is the companies that make the machines and tools to produce chips, they make up 12%. Nvidia and Broadcom alone, they account for 3/4 of that. And this all raises the question, what if we are still early? Market action suggests that that might be the case. The semi-trade has been broadening out with names like AMD, Micron, Marvell, ARM surging over the past month, outperforming even Nvidia and Broadcom. And that helps explain why this semi-rally feels different. It's not just about chips for chips' sake. It's about the infrastructure to run AI at scale. So in other words, compute demand that's powered by training, inference, and storage. Some of the other themes have been renewed as well. Sovereign AI, as the geopolitical overhang in the Middle East, at least in the eyes of markets, has been somewhat blunted. Another overhang that's been softened, Callie, if not resolved, is the China threat. Remember, earlier this year, DeepSeek's R1 model rattled the AI trade, triggered a broad sell-off in the AI trade. Tech stocks, they have now climbed back from those levels. So this feels like a new phase of that trade that we've become familiar with over the last few years.
Right. An important part of what's happened here is that this concern that AI investment was going to peter out or even just kind of drop at the margin seems to have not at all happened or be taking place this year.
Right. As well as sort of it became cheaper or more efficient to actually run AI. Right. And it turns out that inference demand makes up for a lot of that pre-training demand that we saw in the early years of the AI boom. Something that I will mention, Kelly, we'll talk more about this yesterday, though, is potential crack in this trade could be, some of the cold water that's been thrown on reasoning models. They're supposed to take huge amounts of inference compute, and like that Apple paper we talked about a few weeks ago, throwing a little bit of skepticism at that idea.
We got to do that tomorrow because I still don't understand the inferencing, the reasoning part. Like when I ask it a question, is inferencing and reasoning part of that, or you know what I'm saying? I need an explainer.
It will be perfect for you tomorrow. We just released our latest Tech Check take, which dives into that exactly. So
perfect.
We'll bring you.
Nvidia is undoubtedly one of the most significant AI stocks to monitor on Wall Street, even while major giants like Microsoft, Meta Platforms, and Broadcom are shining as pioneers of the AI revolution. Following a technical reset earlier this year, Nvidia's stock has reached an all-time high due to the attention it has received and significant investments from highly regarded mutual funds. The focus on Nvidia is now being further heightened by a number of new initiatives, including as an AI innovation event this week with partner CoreWeave. Nvidia, which was founded in 1993 with an emphasis on 3D graphics processors, is currently regarded as the undisputed leader in cutting-edge semiconductors for accelerated computing and artificial intelligence applications. The majority of its current total sales are now made up of AI data center products and services. Here are just a few of the ways Nvidia is still supporting AI development, including collaborating with CoreWeave on a summit on boosting AI innovation. CoreWeave describes itself as an AI hyperscaler with the goal of providing a cloud platform that will drive the upcoming AI revolution. Nvidia and CoreWeave officials will provide an inside look at the infrastructure aimed at extending the potential of AI at a summit event on Thursday. Stories from IBM, OpenAI, and Mistral AI are featured at the event. In other developments, Nvidia and Hewlett-Packard Enterprise recently announced new AI factory products. The new portfolio aims to provide businesses with a platform for developing and scaling industrial, generative, and agentic AI. Additionally, Nvidia recently teamed up with model builders throughout Europe. The goal of Nvidia's massive language model Nemotron is to adapt AI models to regional languages and customs. France, Italy, Poland, Spain, and Sweden are among the partner countries. Nvidia is constructing and growing the Nvidia Blackwell AI infrastructure in collaboration with partner countries and business titans as part of its European push. Strengthening digital sovereignty, promoting economic expansion, and advancing the AI industrial revolution are the common objectives. Nvidia also made headlines in the field of autonomous driving this month. At the Conference on Computer Vision and Pattern Recognition, the AI chipmaker won an Autonomous Grand Challenge prize. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, So please share your opinions in the comments below. Now let's dive into today's video.
We've answered all of the questions about DeepSeek and the initial fears. You mentioned compute. We were thinking that day, well, maybe you need less compute and it's going to be cheaper. And it turns out, as people were saying then and you're saying now, and which seems to be correct, like, no, more compute.
Yeah, I think
that plays right into Nvidia's hand.
Absolutely. And I think the last time I was on your show was during the DeepSeek, so it's a lot nicer to be here during the rally moments.
Have we put that to bed?
So we have. I do think we have. And I do think the market is interpreting that as an iteration and an evolution, not a revolution. And remember what's been happening, though, with the frontier models. There was this perception back then that frontier models were commoditizing because companies like DeepSeek take a lot of the things that Llama and OpenAI have built because of the open source nature of Llama in particular, that they could extract that inference layer and create an inference model associated with it. But what's happening now is the frontier model developers are actually starting to realize, you know what, we can't give away all the goods. We have to start closing parts of our ecosystem. So the foundational model players are actually saying, look, we need to close certain elements of and protect our IP because we're investing $50 billion plus a year on this, and we want to be more vertically integrated going forward. And so I think that's going to lead to more differentiation versus commoditization, and that's an important nuance for companies like Meta that are investing a lot right now.
You're suggesting when you say middle innings that the game's going to go on for a long time, and Nvidia is going to continue to win it.
I certainly think so. Now, there's going to be other silicon companies that win as well, right? So we have ASIC companies like Broadcom, Marvell, memory players like Micron. So there's a whole host of semiconductor companies. It's not just going to be an Nvidia, dominated game, but every dollar of CapEx right now, 60 cents is being spent on an Nvidia GPU.
Wow.
And so, we know who's winning right now.
Nvidia's stock is still rising after securing a position on the investors' leaderboard and the sector leader screen. The Magnificent Seven members' relative strength line has hit a 52-week high, with its all-time high in sight. By undercutting the low in its previous pattern, Nvidia reset its base count in April. That provided the AI behemoth with the boost it required to begin a new ascent, which it has already done. In a cup with a handle, Nvidia engraved a new purchase zone between 145 and 152.25. Shares rose above that range on Wednesday after landing a price target hike. The stock now presents what can be considered a second possible entry. As Nvidia's stock hits yet another record high, it may also present an opportunity to buy more shares as it breaks through resistance at 153.14 in a consolidation pattern with high volume. As Wall Street analysts evaluate Nvidia's short and long-term prospects, the most recent increase occurred. The next golden wave of Gen AI adoption, according to one expert, will be led by Nvidia. As with any trade, investors need be mindful of risk management, particularly when investing in high flyers like Nvidia. Those principles are maintained by adhering to sensible guidelines on when to buy and sell stocks. Microsoft, Meta, and Broadcom all trade at or close to record highs, and the same conditions apply. That fact is further supported by the recent volatility of CoreWeave's stock. On Wednesday, Nvidia's stock jumped over 4%, finishing at 154.31 ons after reaching a record high of 154.97 during the day. The rise increased the chipmaker's market capitalization to over $3.76 trillion, surpassing Microsoft to become the most valuable publicly traded business once more. The increase came after CEO Jensen Huang gave positive remarks at the company's annual shareholder meeting. Huang emphasized the potential for long-term growth in two fields he feels have multi-trillion-dollar potential: robots and artificial intelligence. According to Huang, Nvidia technology will power billions of robots, millions of driverless cars, and thousands of robotic factories in the future. Over the past year, Nvidia, Microsoft, and Apple have taken turns holding the title of most valuable company in the world. After surpassing Nvidia earlier this month, Microsoft recently took the lead. Ananda Barua of Loop Capital increased Nvidia's price objective from $175 to $250, which increased optimism. According to the researcher, spending on AI and hyperscale infrastructure is increasing and may reach $2 trillion by 2028. Additionally, according to Barua, Nvidia's strong pricing power and dominance in cutting-edge chips might eventually sustain a market valuation of up to $6 trillion. According to the company's latest financial report, its data center business had a 73% increase in sales, resulting in a 69% year-over-year increase. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.